Good day, fellow lizards. It's summer, and not much is happening. Bitcoin put in the low of this range back in February, and since then, we've just been going sideways. Up a bit, down a bit, back to the middle. Same story for months now. There's that old saying, sell in May and go away, but remember to come back in November. So far, the first half of that has been about right. The second half is the interesting part, and that's what I want to look at today. And by the end of this video, you'll be able to look at this structure yourself on any chart and know roughly which part of it you're standing in. To make sense of where we are, you have to zoom out first. My read is that we're in a macro accumulation, the same kind of structure we saw back in 2022. But before the charts, a bit of theory. Because if you don't know what you're looking at, the charts don't really tell you anything. So what we're looking at here is the Wyckoff accumulation schematic. It's about 100 years old, and it's still probably the cleanest description we have of how a market puts in a bottom. There are 5 things to look for, and they come in order. The first one is the selling climax. Heavy selling, high volume, panic. You can see it here, this drop with the long candle at the bottom. That's usually where the low goes in. Not the end of the pain, but the start of the process. The second is the automatic rally. The sellers are exhausted, so price bounces hard. And notice how that bounce sets the top of the range up here? That's your resistance from now on. The third is the secondary test. Price comes back down to see if the sellers are really gone. The fourth is the boring part. And I mean that literally, this is a phase. Weeks or months of moving back and forth inside the range, right here in the middle. This is where most people give up, and honestly, that's kind of the point of it. And then fifth, eventually, you get the spring. You can see it here, right at the bottom. The spring is a move below support. It looks like a breakdown. Stops get taken out, the people who held all the way through finally sell, and then price snaps straight back into the range. That's the last shakeout before the market goes the other way. One thing worth saying, and you don't hear this very often, these labels are very easy to see afterwards. Naming them while you're standing in the middle of it is the hard part, because nobody rings a bell. So let's put it on a real chart. Here's 2022. Selling climax right here. Automatic rally, and resistance gets set at this level. Then the secondary test back down. And then months of not much happening, right in the middle of the range. There's the boring part again. That whole thing took about 6 months. And then we got the FTX crash. That was the spring. Everyone thought it was the end of Bitcoin. It was the bottom. Now let's put the two next to each other. Same sequence, same order, and you can probably see why I keep coming back to it. When we hit that 82K wall, a lot of people on X were already calling the new bull market. Screenshots, targets, the whole thing. But that was the resistance, and it held. Now we're somewhere in the mid-60s, which is the middle of the range. The boring part. Which, if this is what I think it is more or less exactly where we should be right now. And if that's right, then this takes us into Q4. Q4 has historically been a strong quarter for Bitcoin, and for stocks in general. Historically. That's not a promise. Let's quickly check where the actual lines are. Resistance is up here. That's the level we got rejected from. Next is the point of control. If you haven't used it before, it's simply the price where the most volume has traded over a period. So, it's the level the market agrees on most, and price tends to get pulled back towards it. You can see it sits at around 66K, which is basically where we are. That's a lot of what this chop actually is. We've also got a falling wedge forming, and notice how it's compressing right inside the range. That fits, because compression inside a range is what accumulation tends to look like. Now, the level that matters most to me would be somewhere between 53 and 58K. If we come down there and it snaps back, that's the spring, and that would confirm the whole read. If we go down there and just stay there, and we can't get back into the range, then this isn't accumulation, and I'm wrong. This would be the same price, but two completely opposite conclusions. Now, I'm not going to sit here and tell you it can go either way, because that isn't really a view. So let me be clear about where I stand. My base case is accumulation. The structure is held every time it's been tested. The timing lines up with 2022, and the volume is doing what it should be doing. That's where I put most of my weight. But I'll also tell you exactly what would change my mind, and that's the level down there. If we lose it, and we can't reclaim it, then I was wrong. And I'd rather say that now than explain it away in 3 months. So, come back in November? Our read is that we're in the middle of an accumulation, somewhere in the boring part. If you're a long-term holder, then November might well be a perfectly reasonable time to check back in. But here's the thing that's worth understanding, and it's really the reason I made this video. In an accumulation structure, the favorable risk to reward is inside the range, not after the breakout. By the time everybody agrees that it's a bull market again, the range is already behind you. That's not a prediction, and it's not advice. That's just how the structure works. None of this is financial advice. We may hold positions in the assets we talk about. Trading crypto is high risk, and you can lose everything. Do your own research. Next time, I want to show you the other side of this: funding, open interest, positioning, whether the derivatives market actually agrees with the read I just gave you, or whether it doesn't. You'll be surprised how useful it actually is. And even more surprising, almost nobody uses it. So for now, this is it. Take care, and I hope to see you all next time.